In this edition of the BlockByte Weekly, I'm going to cover 4 key stories. So the first one is that markets really roared back to life over the last week, which underpins what we wrote about last week, which is that time in the market is much more important than timing the market. So the S&P index rose 4.5%, Bitcoin was up 7%, Ethereum up 8%, silver had a massive rally up more than 11%, and a lot of this rally across the market happened because the Federal Reserve is largely expected to cut rates going into the December meeting. In fact, Polymarket, which is the largest online crypto betting marketplace, puts the odds of a rate cut at around 88%. Secondly, we saw Bitcoin ETFs and Ethereum ETFs have positive net inflows for the first time in over a month. So there had been heavy institutional selling. We saw that turn around. So 70 million in net inflows into the Bitcoin ETFs. Ethereum's ETFs drew significantly more at $312 million in net inflows. We think that's largely being driven by this narrative that most of the build and tokenization of real world asset, this is not only stable coins, but also private debt and property, increasingly so, is being built on top of Ethereum or Ethereum layer 2s, which is leading to this bullish narrative for Ethereum. The third key story is really around this new Fed chairman. So currently Jerome Powell, who's relatively hawkish in terms of his policy stance, so he's kept rates the same despite a lot of criticism from Trump. Whether rightly or wrongly, he's looked at the market and not cut rates as the president would have hoped. Coming into May of next year, although the decision might be clearer before then, there's several candidates for the new Fed chair position. The leading one amongst them is Kevin Hassett, and Kevin Hassett is known to be a guy who's very pro tax cuts, deregulation, pro growth. In fact, he also helped with the White House Digital Asset Working Group, which released earlier this year on regulatory recommendations for cryptocurrencies. He's also disclosed a more than $1 million investment in Coinbase itself, and he served on Coinbase's Regulatory Advisory Council. We know he's actually very pro digital assets, and we think that actually positions the digital asset market well going into 2026. The last thing that we wanted to touch on over the course of this week was JP Morgan's move into Bitcoin-backed products. Specifically, they've applied to the SEC to launch what's called a Bitcoin-backed structured note. And effectively what this is a Wall Street type product that gives institutional investors access to Bitcoin's upside, but limits their downside. And so if we look at the size of this corporate bond market in the US, it's around $318 trillion. It's actually significantly larger than the equity market. And just running a quick calculation, if 1% of that debt market finds its way into Bitcoin-backed products, that could lead to a $478,000 increase in price per Bitcoin. And the way that's calculated is you take the $318 trillion, you take 1% of that, and then you divide that by the number of Bitcoins in circulation. Now, I'm not saying, of course, that's going to happen, but it's not unreasonable to assume of the institutional debt market could find its way into these Bitcoin-backed products. We also expect other companies, other banks outside of JP Morgan to launch their own Bitcoin-backed structured products as well. Obviously, the famous example is MicroStrategy, known as Strategy, which has done the same. So going into 2026, we've got a new Fed chair, we've got regulations, and we've got more institutional involvement from systemically important global banks looking to be involved in Bitcoin. So really bullish. We are optimistic heading into the new year. And yeah, thank you.